Yo, what's up, guys? Welcome back to another video. It's been a while. Yeah, it's been over a month since we last posted. Until the recent video that we posted, I think about 2 3 days ago. But overall, it's been a month since I just made a video for YouTube specifically, right? So the video that I posted was actually some analysis that I was doing with the free Discord. But overall, I'm just gonna get into it. So we're gonna be doing market analysis. We're gonna go through some of the trades that actually, unfolded this week, and then also looking forward to what the market, can do, right? So overall, what I wanted to actually get into is I want to start off by, understanding that people understand a range, right? So I think most people end up getting caught because of this thing, right? So a range is basically an area where price left, right? Let's say previously we had price, do something like this, right? So what would I consider a range, right? So we previously had a high, right? Price left that high, gave us a break of structure from here, right? Break, gave us a break of structure which ended up being an indication on ICC, right? So the price comes back to correct, right? For the correction, and then price leaves, right? So this range, we had a high, we had a low, right? So this was our previous range, and then price breaking to the upside, it validates this as a range. You get what I'm saying? So price ends up giving that indication to the upside, comes back and corrects, and then we need to see price break above this high over here. So also this can be the new range. Soon as price breaks above, now the indication that continuation turns into an indication to the upside, right? So now we have the latest range being this one over here, right? So we do have a break of structure. We do have a break of structure at that area, right? So like I said, break of structure indication, right? So this low, this higher low that is here should be able to hold price, right? No matter the time frame that you are in, but this higher low should be able to hold price. You get what I'm saying? Even if on the same time frame price is gonna do this, price gives a indication higher, 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 low, but then doesn't correct this. Just know that price will eventually have to come back to this, right? Let's say all of this, hypothetically speaking, let's say all of this is happening on the 4 hour, right? So what will happen is that price would, you still see some sort of structure like this where price would give structure like this, but this doesn't necessarily say this is a new range. You get what I'm saying? The reason being, price has now left this area. You get what I'm saying? Price has now left this area. It went up. But when you drop down to smaller time frames, like 1 hour in this scenario, you would then be able to trade this movement to the upside, understanding that overall, this move overall to the upside is an indication on this range, on the bigger time frame being the 4 hour in that matter. But now, once you're on the 1 hour, you can still consider these as indications and corrections, but still understanding that price has left this and price will soon go back to this area. So even with your trading, or with your what is this, with your targets, you don't want to be in a position where you end up, let's say price corrects back into these and then leaves, right? You don't want to be in a position where you end up aiming for something ridiculous on the other side. What you want to do is want to aim for these highs over here as price continues to give you those, on that internal time frame, right? Remember, 4 hour, the 1 hour, right? So all of this would be, they can still show on the 4 hour, but because price left this area, it didn't correct, right? So what you want to do is, if you're going to be trading the smaller time frame, you just want to also track the ranges, and also still, but with that vision that, okay, we are on our higher time frame, might be the daily, might be the 4 hour. This is what price is looking like, but I highly advise that you start with the 4 hour, not the daily, because once you start with the daily, this would be looking like the 4 hour range, but it is just not the 4 hour range, right? So price starts to come, and the minute we start to see price breaking, the high lows, reason being, we see price make a high, 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 low, high, 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 low on the internal, and then makes a higher high, right? So that means the range that we are in is still also gonna be, the way you treat this one is still gonna be the same. We are in this range. Price made an indication above this level over here, and then price needs to come and correct and break above so you can continue to go to the upside. But price doesn't do that, right? What you wanna wait for, you wanna wait for price to break these high lows, because that's the previous range that price was on. So price starts to do that, then that's when you start to have a market structure shift. Even if price, maybe let's say price did something like this, that will still be a market structure shift, because price didn't break above these highs. So price instead came to break these, higher lows, and then this never be a market structure shift. This still ends up as an indication, no matter how small, big or small it is, it will still be an indication to the downside. You get what I'm saying? Right. So probably if you wanna trade the 1 hour, that's on you. You can still do that. Or you can just wait for price to eventually come to this 4 hour and then look to have a market starter shift to the downside, right? So we're gonna be having price obviously going to the downside, giving those indications to the downside. So in most cases, people end up getting caught because now they're only looking at the internal of the higher time frame, thinking that it is the higher time frame. Meanwhile, it's not, because price left this area, it didn't come and correct. Only for price to come and correct, and now they're thinking the price is bearish, right? They think the price is bearish, but look at this. We have an indication, we have a correction. This is correcting this range that we have previously at this area, right? So what price doing that? We have also a market structure shift, right? We have a market structure shift at that area. This is what you want to see, so you can be able to what, take price to the upside. So if somebody was trading to the downside without understanding that this is a range, they would definitely be selling, because this is indication to them, and then price correct, and then price looking to go to the downside, and they will be selling price at these areas, and then they end up getting caught because price ends up reversing and going to the upside, and not realizing that, oh, we left this area over here, right? We left this area where price given indication came back to correct. That's where, even if you were trading the correction, that's where you trend to stop. You like, okay, now I'm gonna stop. I'm gonna just look at what price does from now on, right? So you wanna probably have a market start shift on those time frame, but if you don't wanna do that, you can still use. And most people also end up getting caught, because now they would think that, okay, in most cases this is a higher low from this, right? Even if you mark this correct, this is a higher low, you end up buying price looking to target these highs over here, right? Price comes, takes you out. Automatically, to some people, this becomes a bearish trend, but it is not. This is still part of the internal of this whole range, and as long as this range is still intact, the lows are still intact, price would not be bearish, price will still be bullish. You get what I'm saying? So regardless of the internal, just need to wait for the internal to also be bearish, which means price, you know, from here, price made a market start shift, and then, then you can probably look to trade the internals based on the higher time frame, or still be able to trade, the higher time frame, and then still aim for those areas over there, right? And like I always say, most of the time, price will always give you structure no matter the time frame, right? Even if you choose to trade the internal from this area over here, stop loss has been below the higher lows created from the market start shift, and still aim for these highs over here, it's still fine, because price will still give you indications and corrections as price continues to go to the upside on the probably on the 1 hour. But overall, the 4 hour, this is the what the the previous range was like, right? So you end up getting that indication also, where price will definitely wanna be looking to break above, and also the next range would now move from this previous range to this one. So now you have to understand that price can correct into all of these, right? As much as it can go up, giving the indication, it can come back and again do the same thing. So that's how you want to always keep track of your range, especially coming from the 4 hour, and then you can drop to the 1 hour and look what price is doing. But if you don't see anything on the 1 hour and you prefer using the 4 hour, you can still be able to take price to the upside, even price doing so, until price breaks the higher lows to the downside. That's when price is shifting. But until then, your movement will still be on that direction that the range is on, right? So if you have a downtrend on a range on a higher time frame, the trend will remain like that. As long as the lower highs don't get taken out on the downtrend of the the range, price will remain bearish, right? So I'm just gonna delete everything here, right? So we're gonna go for the 4 hour on Nasdaq. Just gonna take you through what happened this week, right? So what happened this week is this. Obviously coming to this week, we saw price eventually had given us an indication to the downside, and you might be wondering, oh, how did I come up with all of this that is happening, right? So remember previously we had price break above these lower highs over here, right? Price gave us an indication to the upside. Price came to correct. These are the higher lows, right? Price made a higher low, and then we had an indication above this level over here, right? So price made an indication, price had the room to correct between this high and this higher low because that was the new range. And then eventually price didn't correct. Price instead made a market start shift, broke to the downside, and now price, the range moved from there where the indication was from and then where the indication ended, and this. So this high low and this high where price ended up, breaking to the downside. This is the new range, right? So with the new range being there, price ended up giving us a indication to the downside, right? So price goes up, comes down, goes up. This does, and this here didn't make price bullish, right? It was not bullish, right? This is still price correcting within this proximity over here, right? So you have a lower high being made, right? A internal lower high where price ended up giving us an indication. We have a break of structure to the downside. We have an indication to the downside. Price goes up, corrects, makes a lower high. Also, price gives a within this range. Price gives an indication to the downside. Indication price, coming to this week, we had an indication to the downside, and then obviously with that indication price ended up going to the upside to correct, and then from there price sold. You get what I'm saying? So with these, this is how price was looking like. If you're looking to sell below this area, for me, I didn't sell because the risk reward was not, making sense. Stop loss above the lower highs. You see, if I was aiming for this would be 0.6, 1 is to 0.6, so the risk reward was not ideal for me, right? So we in the Hasu University we do have a confluence, so we wanna end up catching trades within the range before price eventually goes to the downside. Unfortunately, we did not in this week or catch anything on Nasdaq as price was looking to out. I still believed it was gonna push up, right? Because we just in the once we market open, price just rallied to the upside after creating this indication, price rallied and then to the downside. But now we do have a new indication to the downside, right? So now with a new indication to the downside where price was at a lower low previously and a lower high, price led to this, and that would mean we have a new break of structure, right? We have a new break of structure, price to the downside, a new indication. So we can expect coming to the next week, we can expect price to sort of go back and correct. We don't know how far the indication might go, but we can still expect price to come back and correct and to take price to the downside. You get what I'm saying? So this is some of the things that you want to see unfolding in the market as the market is performing, right? So same thing on the Dow. And the Dow Jones also same thing where the market start shift, price at from the higher high that was made, price end up making a market start shift to the downside, price end up giving an indication, lower high, lower low, lower high. As you can see, we're tracking them nicely, lower low, lower high, right? And then price from there coming to this week also get an indication. Price eventually went up to correct, and then from there I had actually buys because I believe price maybe like to still correct and even take out these highs over here. Remember, I spoke about the confluence where we on the Hasu University we have where we're gonna be taking price earlier, which is inside before it eventually goes to the downside. Get what I'm saying? With the continuation, right? So I still believe like price would eventually go there, but my TP was actually above here, so I was actually taking a trade based off the the liquidity, so but price eventually reversed on me, so but yeah, pretty much that's the trade. This I didn't take, the sales I didn't trade. I just wanted to also see price eventually, give me an indication to that, because even if price was to sell, price could have easily went back up to that area and then eventually take us out. You get what I'm saying? So now we have a clear indication to the downside, where now we can clearly see that price had also made another break of structure to the downside, and also this, all of this is happening on the 4 hour. So we have a new indication. Hopefully we can see where price will definitely go this week, probably with the this coming week we can clearly see, maybe price can continue with the sales before it eventually goes back to correct. Ideally this is something that I actually wanted to see, obviously taking price to the downside. But this, if you had to take the side entry from this area, this would have been very much ideal. You get what I'm saying, right? So with that being said, we can definitely also look at the the German 40. The German also had the same thing where price failed to go to the upside. Price had made a higher, after correcting the previous range. Price had also broken above to go to the upside. Also, as you can see, from this, over here, high highs, high lows, higher highs, high lows, higher low, and then higher high, all of those things, right? So price started to break from those levels also, as you can see, price, we had a market start shift from those levels at the top over there, but price made an indication correction. Also price broke to the downside over here, as you can see, price eventually continued to go to the downside, and eventually, as you can see, we ended up with this range this week, right? We ended up with this range this week that we were in. So price made indication, went up to that area that I was referring to, where price ended up coming to correct into. But this is what the trade looks like. So it's always a guaranteed one is to two type of trade, risk to reward actually, a 2 hour risk to reward trade. This is how it will actually look like. I won't go much into details, but if you want to be part of that, you can eventually um, join our Discord and text me if you want to be part of the Hustle University mentorship program, right? So very much so, this is what you want to see. Eventually price, I didn't take this because I was using another pair of German 40 or of the decks, but it wasn't from forex.com, so I didn't realize that it actually had hit, so only when I was trying to set my sell stop, that I realized that, oh, it actually has hit also on my broker. So I was like, oh, this was a late entry for me, so this wouldn't be viable for me to take. Like I also said, the risk to reward was not, same as Nasdaq, the risk to reward probably was not, something that it was taking, and price can easily go back up before, because of this rejection, price can easily go back up, maybe relatively equal highs, whatever the case may be, and then sell off. You get what I'm saying? So pretty much these are some things you just wanna see, and most people probably maybe wanna might have seen an indication here on the 1 hour price correcting, and then as soon as price got there, they were the bought. So that's how most people end up getting caught, because they are not seeing the whole bigger picture of the movement. You know what I'm saying? Right. So fair about that. With that being said, you want to see price continue to go to the downside, give us a new indication, go back and correct as we are overall bearish on the move, right? So we also have the S&P 500. On the S&P 500, also same thing. Price made, a market shift at some point, started to sell to the downside, making lower lows and lower highs, lower low, lower highs. You can see also here, price had made an indication, correction, indication, correction, indication coming to this week that we was in. Price had went up to correct, but it also didn't go up to that area that I was referring to. But then this also ended up happening, where price ended up, going to the downside with the side entry model. I call it the side entry model, but it has its flaws. Like I said, price can quickly reverse on you, take you out. So the confluence that we do have is actually to capture a trade at a high, some of the highest point inside the range before price eventually decides to return to the downside, right? So that can be our first entry. And based on the back testing that I've done, I've realized that after price hits that area and then goes to the downside, your side entry method will actually be, the rest, guaranteed to actually take an entry from the, or you can have easily taken, mark such a correlation entry, which is number 1:3. You eventually find it on the 15 minute, where price will be correlating with the obstruction on the higher time frame. Price broke to the downside on the indication line. As you can see, price is making lower lows and lower highs. Lowers and lower highs, you can easily take in that to the downside. Also, your trade would have looked somewhat like this: lower low, lower high over here, and then obviously this would have been a 1:3 type of trade. You get what I'm saying? So, with that being said, these are some of the things that we teach in terms of how to we prioritize entry methods, and precision, especially on entry methods, right? So those are some of the things that we prioritize. But like I said, these for me were not really given that much in terms of them going back to going back to that area or going back into the trend. So remember, there was a lot of also fundamentals that ended up pushing price like this to the upside. So it was very skeptical for me to actually get into some of the trade. But coming to this coming week, so we can expect probably some good news. But honestly, we have a new indication to the downside. As you can see, we have a new break of structure to the downside. Price had eventually made a break of structure, so we have a new indication to the downside currently. So we can expect price to give us that, continue with the indication and then eventually go back and correct, and we can look to take price again to the downside. So these are some of the things in terms of the market, analysis that we're tracking our ranges, pretty much, and then obviously looking to capture some of those trades as price continues, right? The aim is not to actually be looking to get into a single trade every single time, to be right every single time. That's, I think, most people also try to get wrong. Most of the people who are joining the Aston University, they always want to be in a trade. You know what I'm saying? Actually, the discipline of trading, whatever the case may be, like, process would always, be something that you wanna, the difficult part actually of trading is that you have to train your mind to do something repeatedly without being bored. So we get bored easily. So that's why most people end up losing money, right? So I did a mistake also, like I did showed you on. You stated that I got bored and I wanted to take price to the upside, and then price eventually reversed on me. But I used another method. It wasn't this. I wasn't, I didn't follow my trading plan in terms of ICC. I just used something else, right? So I ended up getting caught, which I should have done better, by the way. But overall, this is what we looking at, right? So basically, some of the things that we do. So coming to this coming week, these are some of the levels. You can go plot them out, play this video, look at those analysis and see what price eventually does, right? So you can be able to take and track your ranges until price breaks the lower highs that currently created this indication, right? That's when we will be having price to be bullish. Same applies to the others. You get what I'm saying? So those are some of the things that I'm referring to. But overall, that's how we're looking. And thank you for watching this video. Don't forget to like, subscribe, and yeah, pretty much share with your friend, guys. All right, bye.